Dr. Ranjit Rath, CMD of Oil India and Chairman of NRL as the Numaligarh Refinery, is joining in exclusively on NDTV Profit. Dr. Ranjit Rath, thank you so much for speaking with us. Let's start by you taking us through the numbers for the financial year and for the quarter. We've seen a 10% increase in PAT, record production levels, but year on year there has been a dip in profitability, isn't it?
First of all, thank you very much for having me, and good morning to all of you there and the viewers. Yes, we had a record performance this year, the highest ever since inception, 6.71 in terms of crude oil and natural gas both. We also scripted a highest ever natural gas, and the year we scripted about 10% growth in terms of our standalone PAT, which is about 6,000 crore. And consolidated, we did about 7,000 crore, which includes NRL and other subsidiaries of ours.
Okay, what has been the standout feature for you, Dr. Rath, for the quarter? And do you see production levels of the kind that we've seen sustaining?
See, it's like this. Oil India is primarily having assets in Upper Assam, which is one of the best basins that we have in Category 1 basin. So we see a lot of opportunity still left in Assam self rather. Now, having said so, we have enhanced our exploration, which is near field exploration per se, and our development drilling campaign, which has resulted in the enhanced production. Now, since these are all mature fields, there is a ingrained production decline which happens. So that production decline happens, say, about 8 to 10% year on year. So whatever growth that we script, say about 2.5 or 3, or last to last year it was even 5%, that's on top of the decline. So the gross one would look at is about 12 to 13% growth. So that happens by virtue of undertaking multiple drilling in terms of our development drilling efforts and immediate monetization given the infrastructure availability that we have in terms of crude oil evacuation.
Okay, what is the kind of trend that you're seeing on crude oil prices? I mean, crude oil prices now have been depressed for a while. We'll wait for the OPEC Plus meet to give us some more clarity. But what is the trend that you see, sir? And how are you changing or moving strategy accordingly?
I totally agree with you. I tend to believe that the current trend that we are witnessing since last 2 months is going to stay here for some time. And given that last year we had a realization number of about $78 per barrel, and this year the outlook would hinge around $65 per barrel or so. So we have lined up 3-pronged strategy to counter this depressed price point. Number one, something called a cost efficiency in terms of our operations. That we have already initiated. Number two, we are going to drill more identified prospect driven, which has got a better pool size wells to maximize our production. And number three would be, during the same period of 1 year, we would have a more aggressive drilling campaign. Let's say last 3 years, we have been scripting about 30 to 35% growth on drilling efforts. And last year, though we spudded about 70 number of wells, we could finally complete the well 59. Now this year also we will have an aggressive drilling program. So these are the 3 things which we think will give us a enhanced production to counter the depressed price point.
Okay, let me just talk a bit about your volume guidance, sir. You have remained committed to a short-term target of 4 metric ton of oil, 5 BCM of gas output. This is by FY27. So you're going from your current 3.5 to 4 for oil and 3.2 to 5 for gas. What is the basis of this volume guidance?
So these are the targets that we have given to ourselves
Okay.
And as you would know, our target for this year would be about 3.77. Now all that would happen by virtue of multiple way of drilling. Let me explain. A, we would identify more potential blocks within our mining lease. B, we have identified some more reported presence of hydrocarbons in our additional development wells. We have done about 40 plus geological studies in the same area, and that has given us a new identified locations about 90 plus. And those are all the prospects that we are looking at. That's one. Second, we are already given an order for a multilateral drilling effort where from a single plinth we are going to drill 3 wells. So that gives us additional opportunity growth. Plus we have also lined up integrated drilling services where the consumables will also be given by the charter hire rig supplier. So these are those interventions in which we would like to enhance our production. As far as the capacity in terms of evacuation is concerned, for crude oil we do not foresee any constraint at all. In terms of natural gas, as you would appreciate, we have a pipeline dedicatedly running from Numaligarh to Duliajan, that's Duliajan-Numaligarh pipeline, where currently we are supplying gas to Numaligarh. Now once the phase 1 of IGGL, that is integrated Indradhanu Gas Grid Limited, the Northeast Gas Grid is commissioned, the phase 1 will have a hookup arrangement, and DNPL, once it is announced as a common carrier, from 1 million standard cubic meter per day to we can ramp up to 2.5 million standard cubic meter per day. That's one in terms of gas infrastructure. Second, from our Kumchai field, which were earlier getting flared,
sure,
about 1 million standard cubic meter per gas, now we have a dedicated pipeline connecting Kumchai to Duliajan. So we are evacuating that gas as well. There are some infill lines which we are also replacing, but most importantly, the Duliajan feeder line for IGGL under Northeast Gas Grid, as we speak, is getting approved, and that connectivity will help us to evacuate another 6 million standard cubic meter per day.
So
that's the outlook we carry for evacuation infrastructure for natural gas.
Got it, sir. So, okay, I'm just trying to, Dr. Rath, good morning, Neeraj here. I'm just trying to pin all of this down into what it would mean for investors who are looking at the business right now. I presume you had an analyst day today or have an analyst day today. And I'm trying to think of the central piece of communication that would pop up in any investor's mind, that while oil prices have been volatile and well accepted, but between FY23 to FY25, for Oil India, the revenues have gone down a little bit. The operational metrics have come off quite a bit, operating margins FY23 to FY25. So what is it that can give me as an investor some comfort about the outlook? What would you say to that, sir?
Okay, so the outlook would always remain positive as far as Oil India is concerned. If you would look at the last 2 years' results, including, and the year just concluded, Oil India has been scripting higher production every year, both in terms of natural gas and crude oil. So therefore, we will continue to grow at a level of 3 to 5% this coming year and year after also. So that's the outlook I would like to give to our investors. And second, we are looking at a better operating margin this year because the crude oil price point is depressed. The rig supply, we would probably have a better rate this year. That's the outlook I would like to share with the investors.
What level are you seeing EBITDA margin, sir? Because you're in the 35.9, 36 range, which is lower in Q4 compared to Q3, compared to Q2 as well. So there has been a bit of depress in that EBITDA margin range for the quarter. Can you tell us why, and do you see a significant improvement to what level?
I agree with that. Now, what happens when you undertake a higher number of drilling? your every effort is to establish hydrocarbon and then produce. So it's basis the additional drilling component, the EBITDA margin has seen a drop. But the most importantly now the target is to identify prospects which will be of bigger size that would enhance our production potential and then an uptick in the EBITDA margin as well.
Dr. Rath, okay, I'm just trying to simplify this, sir. One is, you've given us some sense of what the volume picture could look like, but I'm just trying to understand in the end, what will matter is the bottom line, right, sir? So you've given some guidance around margins. Do you reckon...
I agree with you.
Yeah, so do you believe, sir, that is there a probability that at some point of time in the next 2, 3, 4 years, you could nudge those 10,000 crores worth of profits that you had clocked in FY23? Is that a possibility, sir?
With NRL getting commissioned in December 25, 10,000 crore profit I do not foresee will be an issue.
So in FY26 itself, or maybe in by FY27 you reckon that could happen?
Yes. Because by then we will have the refinery stabilized and we will have a higher production growth. So I do not foresee there will be an issue.
Just one last question before we let you go, sir. Any plans for an IPO for NRL? Would you want to spin that off?
I am not sure about where from you got this message, but at an opportune time I'll definitely share with you, should there be a decision.
Sir, it's not a message, it's a question. Is it something that you are considering, not considering,
okay.
not on the books
okay.
at all, you know, one way or the other? It's a very obvious question, sir.
Okay. I do not want to. Okay, no problem. I am glad that you have asked this question, and I will definitely revert to you once any such decision is taken.
So it is in consideration.
I would say so.
Okay, that's the big one there. Thank you so much, Dr. Ranjit Rath, CMD of Oil India and Chairman of NRL, saying that production levels expected to go up. And I thought this was interesting. NRL as an IPO is under consideration, Neeraj. They will come back to us when that happens. So that's and that's an interesting statement coming up there.
It is.